Welcome, everybody, to another episode of the All Time High Podcast. I am your host, General Mort, and today I'm going to be talking to you guys about why cryptocurrency is cool as fuck. It just is. I was I was actually working on a different episode for you guys, and I was just, I don't know, wasn't feeling right, and I was sitting there, and I was just like, you know what? I just kind of want to talk about how cool this shit is, because it is. It's just really cool, and I want to get people excited about it. So it's kind of the point of today's episode. So if you're here, you're new, I'm excited to tell you about why this stuff is really cool. So first off, of course, let's do a little bit of news. First off, Uniswap V3 has officially been announced, and they've announced the date for the release of V3, which is really exciting. So Uniswap V3 is going to be coming out May 5th, and that is going to come with it a whole suite of upgrades and changes to the platform, more control over how you provide liquidity, just a lot of new features, a lot of new tools. But more importantly, they are going to be integrating a scaling solution called Optimism, which is a layer 2 scaling solution, shortly after the launch. So I would expect probably by mid-May, if not the end of May, which is going to make trading super cheap. Woohoo! Finally, an actual solution and tangible solution to gas fees. So this will mean that your trades will be much more efficient, and it's gonna be a good time. I'm ready to lose money on shitcoins. I hope you guys are. Um, so also OpenSea, if you guys are familiar, it's a big NFT marketplace. It's a decentralized protocol. They just raised $23 million for their marketplace platform, so that's pretty encouraging news. NFTs are super hot right now, and the money is coming in, which is awesome. And lastly, Tesla is now accepting Bitcoin as payment. You can now buy a Tesla with Bitcoin, but more importantly, Elon Musk has stated that the Bitcoin will not be converted into US dollars. So they're actually going to be increasing their Bitcoin reserves through the sale of their vehicles, which I think is awesome. They're also running their own Bitcoin nodes, which is fucking cool, which means that they're probably mining Bitcoin as well. That's a lot of faith and a lot of support from a huge institutional player. So that's really exciting stuff. But let's get into it, guys. And today, like I said, let's talk about why cryptocurrency is cool as fuck. Put that in all caps. All right. The first reason cryptocurrency is cool as fuck: financial sovereignty. What does financial sovereignty mean? It means complete ownership and custody of your money. Means that other people aren't touching your money. That means that you have control over what you want to do with your money, and nobody can tell you what to do otherwise. The bank can't tell you that you can't invest in something. They can't tell you that you can't withdraw a certain amount. They can't tell you that you can deposit a certain amount. It's all up to you, man. Which I think is cool. It's super different from what we're familiar with. I don't even know that most people would realize that they don't really have a lot of control over their finance. And that's not really good. So it's complete self custody of which you own. We rely really heavily on intermediaries in the current financial system. People that kind of control our money, they handle our money, they make sure. They make sure it's safe, whatnot, and but you don't really own your money in that system. You really, what you're doing is kind of giving those parties an IOU. When you deposit money into the bank, they're essentially giving you an IOU for how much money that you've given to them. It might not even really be there. I mean, it most likely is. I'm not gonna be too speculative, but point is, like, there could be a theoretical future where you go to collect that money and it's not there, or they don't have it. They can't pay off their IOU to you because they've loaned it out somewhere else. So that's kind of scary to me. But point is, that's not control of your money. That's somebody else kind of managing your money for you, and you're not really getting a whole lot out of that experience. So one other thing that people really rely on, in the case of intermediaries, institutional finance, is insurance. We don't really have to sacrifice insurance right now. You kind of do. Like, if you want to work and play around in these lending protocols and these borrowing protocols, of course, they're not insured. So if there's an error, you could lose your funds. But good news is there are new tools that are being created for this. New DeFi tools. So it's not like DeFi has ignored insurance. There totally is going to be insurance that you can purchase for your particular assets, for particular protocols, different stuff like that. So we're building new things to mimic those, so that people can feel safe, so people can feel secure about interacting with these different smart contracts and different platforms. Like I mentioned, this is ownership of your assets, and I don't just mean money. When you trade stocks, you put money into Fidelity or Robinhood or whatever it is that you use, and they execute trades for you. They manage your money. If you want to take it out, you ask them. They'll give it to you, hopefully. Um, and that's essentially that process. You're not really in full control right there. Now, you could go and you could trade on a decentralized exchange in Web 3.0 on Ethereum or another layer 1, and you actually control your funds the whole time. Trading governance tokens is essentially trading stocks. And, I say governance tokens, and they're really, they're security tokens, essentially. They're kind of the stock of whatever protocol that you're talking about. But you actually control your money throughout that whole process. When I log into Uniswap, I log in with my wallet. My wallet has all my funds, and I can execute a swap. And when that happens, it takes money out of my account, and it deposits new money in. So that happens directly through me, which is really fascinating. I'm not counting or waiting on Fidelity or Robinhood to execute that trade or to hold on to my stocks and make sure they have them. It's just happening. It's actually taking place in real time, and the trade is final, right? Along this idea of financial sovereignty, I think in the U.S. we're a little bit jaded, or we're a little bit spoiled. In a sense, we have access to tons of financial instruments and platforms and things that can help us grow our wealth, protect our wealth, etc. But that's not really the case in the rest of the world. Especially in second or third world countries where people have significant limited access. So, a lot of times you'll hear people talk about in this industry, banking the unbanked. And the unbanked is what it sounds like. It's people who don't have banks, people who don't have ways to protect their money. So this is insane to me, but across the planet, across the globe, there are 1.6 billion people who do not have access to financial services. That's fucking a lot of people. And these people can't safely store their money. These people are much more susceptible to losing that money because it's not secure, it's not safe, it's not insured, and it's not doing anything for them either. It's not generating interest by putting it in the bank. It's not working for them. So, giving these people new financial tools that they could do whatever they want from anywhere with just an internet connection is incredibly, incredibly huge, incredibly valuable, right? Just to highlight this, check this out. I went and looked at the top 5 countries and what their rate of unbankedness is, right? So check this out. So number 1, Morocco. In Morocco, 71% of people are unbanked. And Vietnam, 69% of people unbanked. In Egypt, 67% of people unbanked. In the Philippines, 66%. And lastly, surprisingly, Mexico, only 63%. Or, sorry, 63%. That's a lot. By comparison, in the USA, only 7% of our population is unbanked. This is a massive disparity. These people are being left behind. They don't have the same access. They don't have the same freedom. And that sucks. It just sucks. It's just not it's not helpful. It doesn't create a long-lasting future if your money's not safe, right? So blockchain is a means of safe storage and access to finance for everybody, literally everybody, as long as you have an internet connection. And at some point, you probably won't even need an internet connection. So right now, to highlight some of the things that are a little bit more similar to what we are when we talk about banking. So banking on the blockchain. So in other words, how can you create a savings account, right, on blockchain? So you I mentioned some lending protocols earlier, but there are a ton of these, right? So there are lending protocols that are basically decentralized autonomous organizations, meaning that nobody controls it. No companies. Well, companies do like build the tools, but they don't completely govern it. They don't completely own it. And these are safe storage for your funds. So we got things like Aave, Compound, Maker, bunch more. And these people are essentially mimicking exactly what the bank does for you. You put your money into the protocol, and you can get an interest rate depending on the demand for that asset. So they also do borrowing. So if there's super high demand for an asset, interest rates go up. Meaning, so it incentivizes people to provide more money, to provide more liquidity so that they can earn passive income on that interest, right? So these yields are substantially higher than what we're used to in traditional banking, where you might get something like 0.5%. And in DeFi on these lending protocols, you probably get something closer to 5% to, I would say, 20+%, which is, this is what, like, even just 5% is 100 times more than what you earn on, like, with a traditional bank. It's absolute absurdity. It's crazy. And this also doesn't account for inflation. So if you're only earning 5% or 0.5%, sorry, annually, and inflation is 2%, you're losing money every year. So this is a new way to leverage your assets, leverage your money, and make sure that it's going to be safe in the future, and that you're actually going to counter inflation somehow. You're actually going to continue growing your wealth over time, right? So you don't have to trust your bank anymore. You can trust these protocols that are automated, that are built by software. The only possible error is in the code, which is obviously a little scary, but with time, these things will be ironed out, and basically all of the banking processes are being automated away in a sense, right? By the way, guys, thank you guys so much for following, subscribing, and stuff. I will be thanking everybody after the stream if that's cool with you guys. So, all right, let's move on. So, financial sovereignty, very cool. Kind of in relation to that, new economies, markets, and ecosystems. What exactly do I mean by that? There's a lot. But basically what I'm talking about is new kinds of currencies and reward systems. So you think about the US dollar. The US dollar is not a very utilitarian token. It does one thing. You exchange value in some asset for monetary value in the US dollar. But inherently doesn't earn you anything in rewards. If you hold $100 in cash, that $100 in cash is going to be $100 today, tomorrow, and a year in the future. So it doesn't do a whole lot. You put it in the bank and you get a little bit back, but that's about it. And not everybody's putting money in the bank, right? So what we're kind of talking about is really the opportunity for passive income, in a way that's much more accessible and open to people. A lot of people, there's tons of ways to generate passive income. But in the terms of DeFi, you don't really have to do a whole lot other than stick it in your savings, right? You would hope that putting your money in the bank would actually help you financially in the long run, but it kind of doesn't. The only thing that it does is really just protect it. So talk about things like interest generation. And this can come in a couple of ways. So we talked about kind of like, you can lend on Aave or Maker or Compound and earn interest on that. But there's another really fascinating thing that blockchain prevents, and it's called staking. Or presents. Did I say prevents? I don't know. So staking, which will kind of become more popular once ETH 2.0 comes out, basically allows you to put up your assets as collateral and earn interest for it. So if I'm staking on Ethereum, I'm basically saying, all right, I'm pledging X amount of Ethereum to help process transactions on the network. And for that help, for providing collateral, I'm going to get paid out for it. I think right now Ethereum generates something like 11% when you stake it. You do have to lock it up for like a year or more, but when more platforms can come out that are going to basically increase accessibility for staking, I don't think you're going to have to do that. I think you can actually going to be able to take it out whenever you want, but that's just one aspect of it. So you've got blending, you've got staking, you've also got things like rewards and yield farming. And yield farming is kind of a fascinating concept too, because you can basically put your money to work in an exchange like trading pair and earn on the fees that take place in that trading pair. So if I provide money in USDC and Ethereum, I think liquidity providers earn like 0.3% on every trade that takes place on the platform. So the platform is just distributing money to all of the holders, all of the liquidity providers. What are the best ETH staking platforms right now? It depends. So there are some that are still kind of waiting to come out, like Rocket Pool. Rocket Pool is going to be a pool-based staking platform, so you won't need the required 32 ETH to participate. There's another one called Staker. I think it's STKR. This is powered by the Anchor platform. And same kind of thing. You don't need, and this is currently live, you don't need the 32 ETH. But different companies like BlockFi and Coinbase and what was the other one? Kraken. Like these are exchanges in some sense. They're also going to be providing staking opportunities. So the only difference is like Coinbase. If you stake on Coinbase, I think they're promising 7.5% return. But they're going to take, I think it's 25% of that because they're facilitating that for you. So, the hope is that things like Rocket Pool and Staker are more friendly and more accessible. So hopefully going to give you higher yields because they don't, they're not really going to be earning on that, whereas Coinbase will. So there's going to be a lot of different opportunities, but this is still very new. So, I would kind of just hold on and wait to see what happens. I would count on Rocket Pool to be a big player in that. There's a lot of hype around Rocket Pool right now. So, that's just one part of it is, earning passive income, making your money work for you in a way that's easy and accessible and not limited to a subset of people, right? So, you're also going to have these new markets for different commodities, for different assets that are actually owned by the community and powered by software instead of, a company behind the scenes. I mean, there's typically always a company or a foundation that's kind of building the baseline software, but once it's deployed, it's mostly automated. These things are kind of just automatically making these things happen, which is really exciting. And these platforms are agnostic to all participants. It's not like you're going to sign up and say, they can't say you can't use it because you are, from this country or XYZ. It's agnostic. It's open to everybody, which I think is really cool. It's really valuable. And that also means globally too. Anybody can participate in these marketplaces. NFTs are a big part of kind of what's creating these new markets right now. NFTs are a new asset class. And the opportunity not just for digital art and digitizing and verifying, assets on the web or on the internet, but for physical assets too. So imagine, I was actually just looking before the show started, looking at a new project that's basically tokenizing land. And you can basically purchase and sell your land in the form of an NFT. Now, that doesn't sound maybe incredibly novel, but it's much more efficient. It's much faster. Those kinds of things are final if you guys have ever purchased property. I actually haven't, but you have things like escrow and you have to meet all these certain requirements, credit. This will kind of just eliminate a lot of that. If you qualify, if you've got the money and you can make the trade, execute it, and that's kind of it. So it will make a lot of our current systems a lot more efficient in the long run. So you've got new types of assets in NFTs and digital art and in-game items that are actually trackable and verifiable. And then you've got the digitization of old ones. So theoretically, all products could be tracked and verified via blockchain, right? And you can even bundle things together inside of NFTs, like a token portfolio. I could say, here's an NFT, and it's got this breakdown of these tokens, and you can either invest in that NFT, maybe purchase it outright, and now you've got all those assets just bundled inside of a little thing. It's kind of crazy. There's just like all of these kinds of new things that we don't have that are possible now. So, I talked a little bit about interest and stuff, but investment opportunities are growing really rapidly in this space because, like I said, these platforms are agnostic to people, right? So if you wanted to do a fundraise On Ethereum, you can't really limit access to anybody. If people have the money, they want to invest in your company, they can. So in 2017 and 18, there was a big, it's called the ICO craze. And ICO stands for initial token offering, or coin offering. So instead of doing an initial public offering, people were doing initial coin offerings, and basically it was just an open sale of their token for people to invest. So if you had Ethereum, if you had a wallet, you come in, you purchase however much you want, and that's basically like you're buying stock in that platform, right? Today, a lot of the investing takes place behind closed doors. So you've got, VC firms and different forms of investing, private parties, and people go out and they might find investors, and it's usually people with deep pockets. So we kind of get cut out. People who are, especially middle America and lower America, we get cut out of the process. And the only opportunity we finally get to buy and invest is once it finally goes to market. Company's probably already worth several $billions, and we don't really get a whole lot out of that, right? Yeah, we can invest in Tesla and all that stuff, and we can still make money. Don't get me wrong. Absolutely can still make money in the stock market. But we're not really getting in on the ground floor. This is crowdfunding fucking times 10. It's Kickstarter, but open, decentralized, and completely agnostic to all participants, right? So obviously there's risk in that. You still need to do your due diligence and make sure that you're investing in something reputable, something real, but there are going to be way more investment opportunities for people like us, for people who don't have a shit ton of money, who want to invest in the ground floor and, bank our money on something we believe in, which I think is really, really fascinating, right? Even stuff like Pool Together, which I think is super, super neat. I was actually reading about this the other day. This is essentially crowdfunded lottery. But even more fascinating, they call it a no-loss lottery. No loss. Meaning you don't lose your money if you participate in the lottery. Basically what you do is you deposit your money into this big fund, and then that fund generates interest, right? Constantly. And they take that interest, and then they pay out people in the form of a lottery if you win. So you don't lose money by participating. You only grow the lottery pool, and you just always have a chance to win, which I think is pretty neat. So it's a little bit more of a participatory lottery process, right? So the next reason I think cryptocurrency is cool as fuck is composability. And basically what composability means is it's the concept that existing tools can kind of be smashed together to make new, more complex tools. Now, this is happening in a ton of different ways, but basically what it means is that the way that a lot of these protocols are designed, they're all open source by nature, and they actually encourage people to take their stuff, smash it together, and make new stuff, which is different than what we have. Facebook doesn't want you going in and taking their stuff and making new shit. You know what I mean? Gambling addicts will love it. Yeah, man, they're not gonna lose any money on it, so why not? I don't think my internet is out. You may be lagging. I'm not sure. I would try refreshing, Javier. So the original tools, they maintain their value though, and then they become a critical piece of kind of how these new tools operate. So let me give you an example. I've talked about this in the past for my previous listeners, but Yearn.finance is a financial aggregator. And basically what they do is they take tools from across the DeFi ecosystem, like I mentioned before, tools like Aave, Compound, and Maker. These are all lending protocols, right? So all basically, think of them like a bank account. So Yearn.finance is an aggregator, and basically what they do is you've got Yearn at the top. Let me move this down here to make more sense. And what it does is basically I deposit funds into Yearn.finance, and I say, find me the highest yield. And basically what Yearn will do is look across the entire DeFi ecosystem and basically say, the yield will be higher here than there, so I'm going to move your funds. So it's constantly moving your money between the ecosystem so that you're constantly earning the highest yield on your money. That's totally wild. That would be like your money in your bank just hopping around bank accounts so you're constantly earning the highest interest rate. Like, it's totally counter to what we're used to. and incredibly valuable at the same time. And definitely, and also ensures that all these different pools, these lending protocols always have liquidity. They always have money in it because it's finding where the demand is greatest and putting your money in there. It's super neat. So, you know, these tools like Aave Compound and Maker are not only great by themselves, but become critical to the ecosystem, become critical so that Yearn.finance can be successful. So the competition is not only good, but it's necessary. It's actually important for the overall health of the ecosystem, in my opinion. And that I think is incredibly fascinating. You know, it's not like it's just not like we're just not used to stuff like that, right? So, in other words, blockchain products will compound on top of each other. So they'll continue to kind of just build on top of each other to make new tools that we can't even think of yet. Right? So instead of being fragmented in their respective ecosystems, you've kind of got, you know, these things that are being just smashed together to make new things. And this is just, like I said, fundamentally different from what we know. You currently can't build an application on top of your bank. Like a product like Yearn.finance is simply just not possible in our current financial ecosystem, right? So in tandem with composability is a concept called interoperability. And I apologize if some of my existing viewers have already heard this stuff, but it's a refresher. So interoperability, very similar to composability in some ways, but also very different. They are distinctly different. So basically what interoperability means is the opportunity for you to move your assets, to move your data between platforms at will. And they will seamlessly be integrated with, no need to convert anything or create a new account. So currently the digital world is highly fragmented. You've got data stored in a ton of different places. You've got assets and different items that can't talk to each other, don't work together. And the things that we buy only exist in their respective ecosystems, right? So, in other words, if I upload a photo to Facebook, it's not immediately available on my Twitter. I would have to take the photo and re-upload it to Twitter again, right? So you have to duplicate data in a lot of ways when you use the current internet, because that's just how it's designed. Things aren't designed to immediately be portable into other opportunities. There are a lot of baseline, open source tools and things that allow you to create, things like, PNGs and JPEGs. Obviously, the web will read most of those things, but you still have to double the data. A tweet I make on Twitter isn't automatically on Facebook, stuff like that, right? So everything kind of exists in its respective place. We have countless accounts to access a variety of web platforms. I can't even tell you how sick it makes me to sign up for new things these days. I don't know why. I just hate giving away my email again and my name and creating another password that I might forget. It's just a lot, right? So when we talk about interoperability, this has a lot to do with what we call Web 3.0. And Web 3.0 is essentially a term used to connote the next evolution of the internet, right? The next version of what the internet will look like. And what we, at least me and my other blockchain people, will basically, Web 3.0 means decentralized applications, things that are not owned by a single company or entity, right? And most Web 3.0 applications, the way you log in is with your wallet. And what does that mean? So, like, assume this is your wallet, and inside your wallet, you've got a bunch of different assets like NFTs. Maybe you've got some, in-game items. Probably got some money, maybe in the form of Ether or stablecoin. I don't know. It could even be land and stuff. Images, data. And when I take my wallet and I go and I log into a platform, let's say it's some sort of, I don't know, let's just assume it's like a decentralized social network. It's just going to prompt me to basically allow it to read what's in my wallet, and then all my assets are immediately available inside of that new platform. It's kind of crazy. Imagine having like a master account that allowed you to use everything. It's so fascinating to me and so much better in terms of user experience. I hate having this fragmented bullshit where I just have all these accounts everywhere and all kinds of stuff. You know, it's just exhausting at some point. I've got a million authenticators for different platforms and different things that I use. And this is just, I just log in and all my shit's already there. It's super neat. It's super cool. So, you know, there are a lot of places where this is going to be incredibly valuable. Things like games. I already mentioned social networks. Data storage. Data storage, I think, is going to be a really, really big one. I mean, we're already pretty familiar with cloud storage. So this is like decentralized cloud storage. So you might have a bunch of stuff saved in something like IPFS or Arweave, and when you go to call it with your wallet, that's kind of rhymes. Call it with your wallet. It's already there. There's no need to download the information from Google Drive and re-upload it to a new network. It's already just tied to your wallet. It's already there. So all you got to do is just tell it where to go. So it's kind of like logging in with Google. If you guys are familiar with like OAuth, you know, this is like a kind of solution to this. You know, OAuth login stuff has been a lot more popular these days. You can go to different websites and you might be able to log in with Twitter, log in with LinkedIn, log in with Twitch, log in with Google, log in with Discord. It's still a lot. It's still like a lot of stuff. So it's like logging in with Google, but there's only one, right? So it's way more powerful, way more interesting to me. So like I said, interoperability and composability, they're similar. Composability being the smashing of products together, interoperability meaning the opportunity for them to work between each other seamlessly. So you have now, in a sense, have seamless access to a suite of new products and applications that already know what you own, what you have. So, you know, forget that they're all monetary for a second, and this could be your social identity. This could be images you stored on the blockchain. It could be avatars, NFTs, in-game items. The possibilities are kind of endless, which I think is totally cool. So what if Twitter meant you also had access to everything you've ever posted on Instagram or Facebook? It kind of makes that whole experience way more engaging because your data is more useful. It's more utilitous. You know, it doesn't exist in a single place. You know, if I upload, some of us grew up in the era of Facebook, and we've got just fucking tons of images and data on there, and it doesn't exist outside of Facebook. You can download it all, but it doesn't do anything for you anywhere else. Imagine just being able to recall that information at will on any platform. I think is really fun. It's really fascinating. You know, you might have a picture and sometimes you go, I don't know, I gotta go find it on Facebook. I'm not sure where it is. But what if it was already just in your wallet? You know, maybe you log into a new game only to find out that items that you bought in a different game are actually usable in this game because they're built on the same standard. So all it takes is some sort of representation for it, right? So that kind of leads me into my next reason that cryptocurrency is super cool, and that is gaming, VR, and the metaverse. Now, the term metaverse is becoming much more popular these days. You know, I'm sure you're familiar with it, especially if you watch the Avengers movies. That's a metaverse because you've got kind of different universes interacting with each other. But cryptocurrency is going to fundamentally change the way that gaming works, especially with regards to in-game economies. So currently, in-game economies they're run by the developers. They decide what items to create, how much they're going to cost, how long you can buy them for, how you can use them, where you can use them, where you can display them, etc. Right? So these in-game economies are going to become real marketplaces. And when I say real marketplaces, I mean that you will be able to exchange, share, sell, transact your information, your data, your items in places that aren't just the game. you can take them to an existing NFT marketplace and actually sell them for monetary value, right? So you're creating an actual real economy, a real market, where people can not only purchase things that they love and find interesting, actually make money with them. You know, I'm a huge fan of World of Warcraft. I've been playing since I was a small child. And I actually learned basic economics playing World of Warcraft because in World of Warcraft you have the auction house. Now, the auction house is basically a marketplace where you can sell in-game items that you either maybe you crafted via their crafting system, or you found maybe it's a rare drop, something like that. But Blizzard controls what can be listed on the marketplace, what can be used on the auction house. The auction house takes a cut, and the in-game currency only exists in the game. There's no real-world equivalent. You can't take it out of the game and trade it for US dollars. It only exists in that particular ecosystem. But nonetheless, people are very active in this marketplace. People are selling and buying stuff on the auction house all the time. Sometimes people are buying assets, jacking up the price, and selling them again. So these kinds of things are already happening, but you can make it more real. You can make it where people are actually not just creating assets in the game via your own game like systems, but maybe building assets and porting them into the game to sell them. So you might become known, recognized as a artist that builds really cool NFTs, really cool in-game items, and people want to buy your stuff, so the value keeps going up. So you actually having an opportunity for people to profit from playing games. And this concept, sorry, a sec. It's called play to earn. Now, some people might ask, well, why do we even want people to make money playing games? I don't know. Why not? How about that? how about why not? If I'm willing to put in the effort, maybe I want to be a game designer someday. And so I want to create assets and I want to sell them in the game. Why not? You're only contributing to the overall health and value of your ecosystem that way. And you're allowing more people to participate and be a part of the process and add a degree of customizability and community investment and value that isn't just the developer saying what's valuable and what's cool. So you're kind of you're bringing in the community more. I mean, you look at there are some big games out there that have just simply thrived off of the modding community. Skyrim, Grand Theft Auto 5, Minecraft. All these games provided significant modding tools to their community, and their community goes nuts. They make all kinds of crazy shit and really cool stuff. But at the end of the day, the developer is really who's profiting for the most part. So some of this stuff is already attempting to be done in our regular world, non-blockchain world. So companies like Roblox, you can basically build games inside of Roblox. Roblox is kind of like a Minecraft clone-esque deal. And basically what they've done is they provided their community with a suite of tools and say, you can come build games inside of Roblox using our engine, and then you can monetize it. So you're basically monetizing your games inside of Roblox, which is honestly super cool and really impressive. I actually really love what Roblox is doing. I think they're kind of paving the way for what this next step is going to be. But, just imagine the monetization of modding. People actually getting paid to produce high quality mods for games that they love. And that's pretty hard to do these days. We've seen the success of some huge mods, and then they maybe translate into new games. Like if you look way back in Warcraft 3, you had Dota. And then that team basically branched off and made Dota 2, their own standalone product. Back in the day, you had Arma 3 and DayZ, which was a mod for Arma 3, and then they broke off and made their own standalone product, albeit it kind of sucked ass, but not the point. The thing is, though, Roblox still has some limitations. It's still a centralized company, and you only have access to their tools, what they want you to build. Not necessarily what they want you to build, but what you can build with. And the difference is, like we mentioned, blockchain assets are interoperable. So it doesn't have to just exist inside of Roblox. It can exist in a bunch of new ecosystems and communities and different things. So that is something that just can't be done currently because you have this standard that stuff is being built on top of that makes it basically instantly portable to new places, right? So you're gonna have a ton of crossovers and games that are basically built to interact with each other, and I think that's just super exciting and brings us closer to the world that I've always wanted to see, which is the Ready Player One, my full dive video game experience where I'm teleported to a new world. Um, that is where we're kind of heading with this stuff in some ways. The world of Ready Player One may not be too far off. In Ready Player One, I don't know if you guys have read the book or seen the movie. If you saw the movie and you liked it, you're wrong. If you read the book and you saw the movie, you hated the movie. And if you saw the movie and you haven't read the book, read the book because it's actually awesome. But Ready Player One, outside of the dystopian garbage, which obviously is not what I'm rooting for, the currency in the game is like worth more than the real world. People can build their own ecosystems, their own like planets or areas. Yes, movie was trash. Thank you. And build their own assets and sell them in the game. That's what this is all enabling. Like this is the foundation of this shit. Yeah, you absolutely should read it. It's a fantastic book. Actually has been my favorite for a long time. So, there are a ton of projects doing things like this. Obviously, to get to Ready Player One, we're still way far off. It's going to be a while. But these are the building blocks. These are the things that are going to actually let it happen. If you guys do want to check out some gaming projects, I'll give you some examples. Axie Infinity is pretty neat. Gods Unchained, trading card game, basically like Hearthstone, but all the cards are actually unique NFTs. CryptoKitties, kind of like Neopets, where all of the kitties are unique and can be breeded, and they all have different traits, unique traits and stuff. Upland is another one. It's like Monopoly, but you can buy and purchase property in their world that's a one-to-one recreation of the real world. So it's pretty interesting. But moving on, this next topic I want to talk about is pretty kind of out there, but I think it's super relevant to kind of what is happening in society right now. And it's called user-generated capital. Now, it sounds like user-generated content, but it's basically creators creating their own kind of capital, their own currency, their own value, right? So more than ever, society is betting on the people they like, right? Great example of this, Elon Musk. Now, I'd say that there's a pretty good argument that an investment in Tesla or SpaceX is an investment in Elon Musk. He's not perfect, but people love his idealism. They love his energy. They love what he's trying to do. And people want to dream. People want to believe in other people, right? I think fundamentally that's just something that humans want to do. And it's kind of hard to relate that way to a big corporation or a big tech company, right? You might, really like certain products and certain brands, but it's really difficult to relate to them on a personal level unless they have a CEO or a public figure that is really recognizable and you can believe in what they believe in, right? Same thing with Steve Jobs back in the day. And even more so today when you have Twitch and TikTok and all these new creators who are creating their own value and their own platforms via their own content, right? So imagine investing in your favorite creator as a brand. Or let's say a company, right? So maybe you come and you watch General Mort's stream. He's got, whatever, a couple hundred followers. And you say, I really like this guy. I think he's going to be huge one day. And you purchase, I don't know, Mort coin. Or maybe, even better, you interact with me. Maybe you tip me or something. And you get a reward in the form of Mort coin, right? So it's basically a reward in the form of a token. Now, today, Mort coin probably not worth anything. In a year, if General Mort grows, then maybe it is. Maybe people start to see value in that, and they're starting to invest in that creator's popularity and that person's future. So instead of just donating your money away or subscribing, you actually are getting something for your support. So you can actually profit for supporting people, which I think is just cool. I mean, imagine if you could go back in time and invest, like, just if there was an investment fund or a way that you could invest in all of the early YouTube creators, that would be super cool, and people would make a ton of money. And I think that there is a market for it. People believe in these people and they want to invest in them, but it's kind of a new world in a way. People, there's not really an easy way to do that, but people are actually creating their own tokens right now. There's a couple platforms. I think one is called Roll, and you can basically, as a creator, mint your own token. You can give them away to your community, and get people involved and basically find unique ways to distribute it. And there's an actual live marketplace for it. People are buying and trading these tokens. And so you're basically, in a way, you have a stock for your own personal self. It's kind of wild. But, like I said, this is just counter to how we interact with creators and celebrities. Right now, we buy their products, we donate to them, and we just don't really get anything out of that interaction. Now, interactions become investments, or can become investments, right? So it's just a completely new opportunity or a new way to interact with celebrities and creators. And now these investments are not only, maybe have monetary value, but they have utility as well. So they've got utility and value, versus getting, I don't know, some creator's cool hat. And, yeah, you can wear the hat and it's cool, but it's probably not tradable again. And you're probably not going to sell it to anybody else. But imagine you got some super rare General Mort NFT, or, you showed up to a certain event and you got X amount of Mort coin. It just is a new way to kind of incentivize the creator or celebrity to user relationship, which I think is super fascinating. Anyway, the last reason that I want to talk about why cryptocurrency is super cool is a truly global economy. Every day, the world becomes a little bit closer, right? As everything becomes more digital, as everything becomes more on the internet, we are increasingly global as a society. But it's still pretty hard to trade cross borders, trade with other companies, do things like that, right? So I would not be surprised to see Ethereum become the global settlement layer of the future. And this is because you can trade pretty much any kind of asset on Ethereum. So, and it's all tracked, verified, and secure via the blockchain, via the actual nature of the technology. For example, Ethereum is currently on track to settle $1.6 trillion in Q1 alone of this year. That's pretty substantial. I think obviously that is still dwarfed by the current financial ecosystem and the amount of money that they're moving and settling. But this is a project that nobody owns, that is completely community built, completely decentralized. Like, this is staggering stuff. This is absolutely incredible to me. And this is, value is being traded in a vast variety of different things. It might be NFTs, it might be USD coin, which is 1-to-1 with the US dollar. So why not? It's more efficient. It is cheaper. And it's direct. I mean, this is actually, it's just better in so many ways, right? If I wanted to trade $1 to somebody, there's probably not a whole lot of ways that I could send somebody $1, especially overseas, where it's going to be, not going to cost a lot of money, right? Typically, if you want to make like a bake transaction overseas, you're probably going to pay like almost 10% on that transaction, which is a lot. Maybe not for $1, but what if you wanted to send $1 million? 9% of that is a lot of money. So imagine the ability to trade $1 or $1 million in potentially seconds with full finality, and ultimately it'll probably cost less than $1. Now, let me be clear. This is not how it currently is. It is somewhat expensive to do simple transactions. You're probably going to pay like somewhere between $5 and $10. But that's also agnostic of whether it's $1 or $1 million. So if I wanted to send $1 million overseas, paying $5, that's a fucking slam dunk. There's no reason not to, right? And but long term, once they solve gas fees and stuff and network congestion, those fees are going to be really, really, really low. And the ability to send micropayments, small payments for pennies, for less than $1, is just simply incredibly valuable. Like there's just so much power to that. The ability to move value instantly for very cheap in a way that's efficient and publicly secure and verifiable. It's awesome, right? So, this doesn't really mean you're just initiating a transaction either, right? Once those few seconds pass, it's transacted and settled in that time period. So it's not like I send the transaction to the bank and the bank's like, okay, we're going to send your money to Mexico. You're going to pay 9% and it's probably going to take 3 to 5 days. Hopefully nothing goes wrong, right? If I send money on Ethereum, I say, all right, I'm Morton. I want to send money to Alice. I create a transaction. I say, I want to send 1 Ethereum to Alice. I sign it. It goes to the blockchain. Blockchain picks it up. They make the transaction in probably a minute or two right now, and it's probably going to cost me a couple dollars. And then the money actually goes right to Alice. It's in her account now. She's not waiting for the bank to clear it and make sure it's safe and all this stuff. Money's there. That's it. That's all you got to do, right? So doing business across borders has become really cumbersome. Requires a ton of intermediation from things like foreign banks and exchanges. And these kind of just slow the process down. Everything is so antiquated. It's so slow, comparatively speaking. And it's inefficient, right? You've got... imagine how much money it takes to, complete this whole process. All the people that have to be involved, all the software that has to be involved, and just the amount of little things that have to get done, right? Cryptocurrency changes all that. It makes it simple. It makes it fast. And it makes it cheap. So I don't think that this future is unrealistic, where Ethereum becomes the global financial settlement layer, right? So alongside this, you have advanced tracking and verification tools. So assuming, like we talked about earlier, we can tokenize physical assets on the blockchain, which makes it way easier to track and verify, the, what's the word I'm looking for? Oh my God, I'm trying to say realness. I'm just gonna say realness of an item, make sure it's not fraudulent, right? And you can bundle things in NFTs and just do all kinds of crazy, interesting, different things that make it more efficient, right? So you now have, assuming that Ethereum is the global settlement layer, you have a single transparent ledger for global trade. And I just think that is incredibly valuable. You now have a way where you can track what's going on in terms of global trade and verify that it's all happening and prove authenticity and ownership. And it's just, there's so much going on. And that's so cool to me. All these things are so cool to me, right? I don't know. Hopefully it's cool to you guys too. But to sum up, these are among the reasons. There are a lot of reasons I find this shit super cool, but, to recap, financial sovereignty, ownership of your money, ownership of your finances, new economies, new markets, new opportunities for people, right? That's kind of really what it is. It's just new opportunities for people to make money, for people to take control of what they own and put it to work. Composability, new tools for the future that we can't even think of yet because the tools that are being built to make new tools are still being built. You know what I mean? Like there's going to be so many things like Finance, which just don't exist currently. Like there's no real world equivalent. Interoperability, the ability for your assets, for the things you own to be usable outside of the places where you got them. You know, take it somewhere else and make it, take a picture you like that you got on OpenSea and display it in your in-game world and your in-game house, right? Stuff like that. So obviously, gaming and the metaverse. I'm a huge gamer. I cannot wait to see this reality because it's just going to open up the world of gaming so much more. Gaming is finally becoming legit with esports. People are starting to recognize the viability of making a career in games, and this is just going to push that one step further. User-generated capital. Investing in the people we like because we believe in them and getting something back for it. I think that's just a natural progression of the future these days. CEOs back in the day weren't these public figures like they are today. Now these people are, they're active on Twitter and they have things to say and they have, respectively, their own agenda and their own goals and ambitions, and people buy into them. And we sometimes just buy into who they are. And I think that is not going to change anytime soon. And lastly, like I mentioned, a truly global economy. The ability to do global trade without tons of restrictions and different criteria that you have to meet. An open marketplace, an open place where people can take control of what they have, put it to work, sell it, track it, verify it, and prove ownership, right? So these are just some of the reasons that I find cryptocurrency cool as fuck. I see so many opportunities for disruption, for change, and what we're currently doing, and kind of a way to restart in some ways. I read a tweet not too long ago that basically said it just would be easier to build a new financial infrastructure than to fix the existing one because it's so antiquated, it's so bloated with bullshit that it's just going to be easier to move on and do something new. And I think this is what's new. I think this is what we're going to move on to. So that is pretty much all I got for you guys. Thank you all so much for hanging out with me today. Please like, follow, subscribe, all that shit. Tell your friends if you think they'd like it. And be sure to check the info panel below. Follow me on Twitter if you want. I like to tweet all kinds of random stuff. And as always, I will be sticking around to chat with you guys for a little bit. If anybody has any questions, want me to check out some projects, videos, whatever, just let me know. Thank you, everybody, and I hope that you all have a wonderful day and weekend, and I will see you all next time. And let's get the music back, yeah? Whew.